Hi, it's Angela Torville and Mike Torville, your hosts of Get Moving, the real estate roadmap with the at-home team, where we're going to provide you with the education, tools, and unfiltered talk to keep you in the driver's seat. Thanks for joining. Hey, welcome back to Get Moving with Angela and Mike Torville. Today we have a special guest from CMG Home Loans. She's our local reverse mortgage specialist, Millie Potter. How are you, Millie?
Doing great.
Thanks for coming on the show.
Thanks for having me.
Yeah, thanks for being a specialist in something that's really unique in our industry, and I don't think it gets talked about a lot.
It needs to be talked about more.
Yes.
I think it needs to be talked about because people misunderstand it, right?
Correct.
Yeah.
And all the commercials that we have, and some people, I don't think that's right. But how many years has this program been in place now? 30?
Well, it was signed into law by President Reagan. It was enacted within the next 10 years. So just to give you an idea, it's been around a while. The original structure wasn't the best and caused it to have some negative connotation.
And some of those stuck, right?
Some stuck, but they've revamped it just over 10 years ago.
Okay.
To make it more viable for long term because people live a lot longer now.
Mm-hmm.
Yeah. There's more of us, in that age group. So I think what we could do, because we're going to get into some of those myths, some of those misunderstandings, and answer some of the common questions that people have, because you encounter this all the time.
Yes.
By the way, you're a reverse mortgage specialist. You still are a loan officer, but do you do other types of mortgages, or do you strictly stick to reverse mortgages?
My company has many products.
Okay.
I choose to stick to just reverse mortgages.
Okay. But you were a loan officer.
You
you know all about all the other programs.
I do.
But you, for a lot of different reasons, you've become a specialist, kind of like the go-to person here. And I think that's great. So I don't mean to keep blabbing here, but I think, I wanted to just make sure
what made you niche down to reverse? What made you go in that direction?
So it was during COVID. We used to do a weekly meeting online with the entire region, and our senior vice president had one of the reverse mortgage specialists from CMG come onto our call to talk a little bit about that because they were trying to expand their reach. They were looking for loan officers, and I heard what he had to say, and I had heard of reverse, never really investigated it because it was just, whatever.
You got enough on your plate as a loan
and
officer?
it seemed a little complicated too, at least to me it did. Yeah.
So
the backwards way.
I reached out to his manager and talked with her, and within 30 days, I decided that was going to be my future because there's such a need. And there's so many people, as a loan officer, you can't help sometimes because once they retire, there's not enough income to qualify for a home equity loan or a regular mortgage when they need it to fix the house. What do?
Yeah, and I think that was a smart move because also, too, there aren't a lot of reverse mortgage specialists,
This
right?
is true.
Just not many of us that know about that product because a lot of people say, well, I'll refer that out to somebody else who knows. Yeah.
And usually, honestly, if I didn't have Millie, I would be sending it to probably someone I don't really know.
Right.
But I'm, for the audience in a, Crayola kind of way, what is a reverse mortgage?
So it is a method for people to access equity, a portion of the equity in their home to help satisfy a budget need, a home repair need. Maybe it's to cover some new expenses that, medicines or doctor's visits that have increased for whatever reason. It's just a different way rather than liquidating their retirement funds that help them fit their budget. Taking a lump sum of $10,000-$20,000 to pay for something doesn't make sense, because it's going to shorten the longevity of that product.
Right.
Sometimes an alternative would be that they'd have to take out a home equity loan, and yet they get the cash needed, but they have to pay it back.
Correct, because that affects the budget as well.
This type of mortgage, there is no monthly payment.
No mortgage payment required. They're still required to make their own real estate tax payments and homeowners insurance payments, and obviously maintain the home so that it's livable.
And instead of paying, you get paid.
You can. It can be an income source on a monthly basis. It can be a line of credit they access as needed. It could be we're going to pay their taxes and insurance for them. We set aside a portion of their equity, and they still may have a line of credit to use, just not as much. And now they don't have to worry about that tax bill coming in or the homeowner's insurance renewal coming in.
And potentially losing their home.
Correct, because if you don't pay those things, somebody's going to get their money.
Okay, I'm going to come in like the person has no idea what a reverse mortgage is. Who is the ideal client? What's the profile of someone that this would make sense for?
So in general, the minimum age is 62 for the regular reverse mortgage. There are some proprietary programs that allow a younger age. In Massachusetts, that younger age is 60. In many other states, it's 55.
Oh, wow. Okay.
And that's usually for higher priced homes, like, the million plus, there's, because their age determines the amount of equity they can access.
Which makes sense.
Because we got to plan for the future growing balance. At age 62, they're going to have access to around 35% of the value of the home. That can be used to pay off an existing mortgage. Maybe they took it out in their 50s. Now they're in their 70s. They still have 10 years to go, and they want to get rid of it because it's impacting their budget.
Okay.
But part of that payment are taxes and insurance. So it's, determining, are they still going to be affordable in their home?
Right.
Or should we escrow for taxes and insurance to make it affordable?
So you have all kinds of variable situations. It's not one fits all. You have all kinds of modifying situations.
Exactly. And the interviews I go through can last an hour just to make sure I've got all the facts and then discuss options.
And we talked about this before, but when people want to know about it, and they might be a little intimidated, a little unsure, misunderstand it, there's no cost to a phone call.
No.
And to discover if this is appropriate or not, to learn something, to say, hey, there's things I didn't know. Maybe this is a solution. But the phone call, they have nothing to lose.
Right.
By calling.
That's correct.
Yeah.
And I encourage them to have family involved if there's children, so the children understand the reasons they may look into this. And sometimes the children say, no, mom or dad, we'll help you out, which is fine. They don't have to have the equity in home. But in many cases, the children don't want the house. They've already got their houses.
Yeah.
And it's going to be a burden to them later on.
Well, then let's get into that, because a lot of people think, well, they don't own the house anymore. The bank owns the house. What happens after that? Does the bank take the house if the kids don't want it?
It's always the owner's home. It's the deed stays in their name.
Okay.
There's recorded mortgage on it, just like any other mortgage, with the exception there's actually two. One for the amount we're starting at, and one for the projected amount 30 years down the road, so that the lien covers the entire balance. Exactly.
Yeah. I mean, I've been on that other end of a reverse mortgage where I have the surviving children and they're buying that house. They're still maintaining that home and keeping it in the family. And it works the same. I mean, there's some specific deadlines and things that we have to make sure we meet. But if that child or adult child qualifies to buy that home, I've definitely financed on the other end and paid off the reverse.
Right.
And it's scary for them because right away, and it's, not, we don't want to talk about dark things, but when their parent passes, they are getting notice of, hey,
you need
money's due, and so.
And in some cases, the taxes and insurance being escrowed, the lender no longer, once the party can no longer live in that home, whether they passed away or they go into long-term care, whoever is taking over has to start covering those costs, because the lender isn't going to cover it for the person who can't live there.
Is that an immediate requirement? How long do they have?
Generally 3 to 6 months is what they work with.
Okay.
But if the kids are dragging their feet or the heirs are dragging their feet, they'll escalate it because it's necessary.
I found with one family I helped, they were selling. They couldn't qualify.
Yeah.
We had to buy something else. And they worked with them.
Yeah.
I mean, for some reason the house wasn't selling, but it was actively on the market. It was just taking a while, and they were getting notices, but I kept reassuring them they're going to work with you. You have intent. The intent is to pay
It's
this
all
back.
about
You're not
communication.
exactly. And so it's scary. What my point is they're getting these notices that may seem scary, and they're living with a big life change in their family.
Yeah.
But it's not a black and white thing.
No.
Work and talk to the people. They will
Exactly.
make sure
And
nothing goes sideways.
so if the person had the mortgage for a very long time, the reverse mortgage, it could exceed the value of the home.
Mm-hmm.
In that case, the heirs only have to pay back 95% of what it appraises for at that time.
Well, that's awesome.
So
That's a nice.
if it's, underwater,
Mm-hmm.
they're not going to absorb that hit.
Okay.
Okay, that's good.
That's
Because that
really
could
good
be a
to know.
scary
Yeah.
Exactly.
aspect of this. And I guess hence the conversation. So people and their heirs, the children, understand it all. And I think to have this may happen if you speak with a couple who qualifies over 62 and they understand, they say, this makes sense for us. Then they tell their children who don't understand, that children say, oh, stop, time out, Pa, that's kind of scary. I guess the first thing would be for you to have that same conversation with the kids,
Yes.
because I'm sure I have a feeling you speak with a lot of people, and then somewhere down the road, they change course.
Mhm.
And a lot of it, I would think this because of the misinformation.
Yes. And I recently had a couple that own a business. They're in their late 70s, early 80s, and they had been borrowing money from one of their daughters to stay above water because the business they were restructuring. And she did the counseling with them, did everything with them. And then she wasn't available the next day when I needed to speak to them again. And she had her sister come on,
Hmm.
totally against it,
Yeah.
talked them right out of it.
Wow.
So it happens, but I want the heirs to know. I don't want that to be a bad thing later on.
Yeah, there's a lot of consulting you're doing around this.
Exactly.
Yeah, it's not to be taken lightly,
Right.
and you're there to obviously lend your time.
Well.
I mean, that's a huge chunk
It's
you're taking on
Mhm.
Correct.
to consult multiple family members, the homeowners over and over,
Yes.
because I think, the solution is clear.
Yep.
But the what ifs are what you get into this
Correct.
rabbit hole on, right? So that's a lot of back and forth.
But even after the conversation, they get a proposal. So it's got, you do a good faith estimate when you're
Yeah, we do.
so they can see the numbers. Well, the proposal is like 60 pages because
Oof.
it doesn't just show closing costs; it shows the amortization
Mhm.
for the next 30 years based on the information we have at the time. Appraised value can change that, of course, but for the
You're
most part,
projecting,
it's projecting forward. And if they're 80 and they're looking at it and saying, "Oh my God, 15 years from now," I'm like, "Really?"
Yeah.
I mean,
to say
you
that
could look
nicely,
that
though.
far. Yeah. How do you say that nicely?
Be careful. Yeah. But it's true. But you have to give some projections
Of
so they can
course.
see what this might look like in 5, 10,
And I
15
want them
years.
to know. I want them to walk in eyes wide open.
Yeah, yeah.
I don't want because they also have to do mandatory counseling. And if the counselor gets the sense that they don't understand the program, we're not going anywhere.
Mm-hmm.
Well, that sounds like you had started, in the 90s, this product came available to help, and there was some pitfalls, and they learned as they went, and they've created some safety guards, and it
Yeah.
sounds like they have to do counseling. You're consulting over, probably
Months.
over months,
Months.
of like call after call after call,
Right.
60-page reports to be transparent. I mean, what other safety guards have been put in to educate, the consumer?
Well,
on this?
obviously, similar to a regular loan,
Mhm.
we collect documentation, we order an appraisal, and the appraisal can change the numbers
Right,
up or down.
right.
You
That
know.
happens a lot in my world too. Yeah.
changes the rules a bit, and that's anywhere in that process. The only expense they incur typically is the counseling fee
Okay.
because that's an independent company. Everything else we don't collect for an appraisal up front like you have to,
Mhm.
or a credit report. Everything is no cost
Yeah. Okay.
because most of
Oh,
them
that
don't
makes
have
sense.
the money.
Right. They're doing this for a reason.
Right.
Are you finding a lot of people are doing this to fill the gap of maybe what their Social Security is providing, and they didn't really prepare for retirement?
Some of it is that. Some of it is, real estate taxes. If you look at how much real estate taxes, because
increased,
property
yeah.
values have gone up.
Yeah. Yeah.
And they're not benefiting from that property value increase unless they do a reverse mortgage, right?
Right. Right.
So it can be a means just to fill that gap when prices go up,
Okay.
or a new roof. you know, they've owned the house for how many years? When they moved in, it was probably brand new or close to it. And now 20, 30 years later,
Right.
they
They
got
did
to
that.
do the roof.
Yeah, yeah.
Mhm.
Probably 10 nowadays.
Yeah. Well, true.
We wish they made
And
things to last 30
appliances-
years.
Appliances, just think, you know, appliances
Right.
aren't cheap.
Well,
Right.
you would say every 5-10 years you need some kind of facelift to a house, one way or another.
So
Yeah.
this enables them to maintain the home that they want, you know, how they want it maintained. You know, we don't want leaky roofs, and we don't want, you know,
Well, we don't want blight in our neighborhoods,
Exactly.
after if they, do
'cause
let
it'll
it go
affect the value of the
completely.
home.
Yeah.
Exactly.
And speaking of that, because in our book, Get Moving, that we just published a couple months ago, we sought expert advice from many people in the area, Millie among them.
Mm-hmm.
And there's a chapter, an entire chapter
Mhm.
about reverse mortgages, how
Mhm.
they work, addressing some of these myths and misunderstandings. And also, too, there's several pages that you have contributed for, and you gave a few examples.
Mhm.
I think they were glaring examples of how this might be a solution, right?
Mhm.
And there's dozens, hundreds probably of different scenarios that there was a problem solver for this. But let's talk about a couple of examples, and
Mhm.
maybe it's the one you have in the book, or maybe it's just another one, but you've got a myriad of reasons
Yes.
to do this. But let's come up with a couple of examples so we can talk about that
Mhm.
and how people can relate to those. Yeah.
Yeah. So I've got a couple right now that are just getting started on doing it, and the wife is slightly older than the husband. They both have been married in the past, never had children. Old spouses are gone. They married about 10 years ago, and right now budget is fine, but failing health can cause that to go off
Oh,
Right.
the rails.
Yep.
So proactively, they're taking out the reverse to build a line of credit that the surviving spouse will be able to access for income when the loss of the income from the deceased
when
partner
and
goes
if,
away.
right? So
Right.
it may not be, but almost like an insurance policy.
Correct.
Right.
Okay.
Correct. Almost like an annuity.
Okay.
You know, you're leaving it there until you need it.
Mhm.
And when you need it, it's a phone call to the servicer saying, okay, now I need money. What can I receive monthly for the rest of my life? Or I need this amount, and it'll be for a period of time. So
Okay.
depending, you know, I mean, I think the wife maybe gets $1,400 a month, and right now they're in their 70s. So if she passed first, he'd lose that 1,400. Now some of the expenses can, you know,
Mhm.
joint expenses would remain the same,
Yeah.
but there's, you know, food costs would go down, but slightly. You know, you're still going to eat,
We still have
Yes.
inflation too.
and you
What's
still
happening.
have utilities. You
Yeah.
still have, you know, those things,
Mhm.
and those adjust, and you know, not downward.
In their
usually.
case, it
I was
was,
gonna say we can almost expect up.
Yeah,
That. Yep.
it was preparing for that uncertainty in the near future.
Exactly.
Right.
So this is their solution. They're going to take it out now. If she lives 5 years, that line of credit will have doubled, more than doubled
Hmm.
in 5 years, and it'll give him that resource.
See, that's great. And I know there's another example in the book that you mentioned about, and I'll get some of this wrong, but a woman who was getting on in their late 60s, and she wasn't able to maintain her house, and she took out a reverse mortgage.
Mhm.
How did that work out?
So if it's the one I recall, she had been working part-time along getting her Social Security, and she had a minor stroke and couldn't work anymore. So she was trying to replace the income,
Hmm.
and she needed $750 a month. Now she was in her 70s, and at the time the interest rates were a little lower. We could give her $750 a month for, I believe it was 10 years, and she looked at me and said, "Well, there's not a lot of longevity in my life. If I'm still alive in 10 years, I'll go live with my sister."
Okay. All right.
It'll be okay at that point.
It'll be
yeah.
okay at that
Yeah.
point.
And I think in that case, because the house was in disrepair, and she was able to use some of that money to bring it
make
back up.
some, yes, there were a
And-
couple of minor things, not
Yeah.
minor, one was a little bit major. And that's the other thing, when we do an appraisal, the appraiser tells us if there's inefficiencies,
Mhm.
things that need to be repaired, and generally they have to be done prior to closing unless weather related. We can't paint a house in the middle of winter,
Right.
they would hold back. So peeling and chipping paint, just like on
A government type of
government
yep.
loans.
Mhm.
and water stains on the ceiling, check that roof.
Deferred maintenance, right?
Deferred
Which would
maintenance.
deteriorate a home more. So
And
that makes
speaking of that,
sense.
it's a good point.
Yeah.
A reverse mortgage is a government loan.
It is
It's a government loan, so it's backed
The-
by the government.
the original.
Yeah.
Well, it's a FHA loan,
Right.
Okay.
That's important to know because
Yes.
it's backed by.
and that's the
yeah.
traditional
Okay.
reverse. The proprietary are not. So
Okay.
Do they
You have
we
other
get
options.
conventional.
adhere to the same rules?
Similar. They're not quite as picky as FHA.
On the property
On the
standard.
property
Yeah,
standard,
which is typical. That's
Okay.
a very
Yeah,
normal.
yeah.
Across
Yeah.
the board, I think. With
But
lending in
most of
general,
the reverse mortgages are
Are
FHA.
most of the
backed.
ones I do are FHA.
which
Okay.
just probably makes more sense. Yeah, for the client.
Yeah.
Just a weird question. Might be
Mm-hmm.
cut out of this podcast. I don't know. But
We'll
do you
see.
find do you find some people are using this to avoid nursing homes?
Some of it could be that, but in most cases, I mean, if they have equity in their home, if
Right.
they go into a nursing home and they're not able to pay cash for that coverage,
Mhm.
there's going to be a lien placed on the home.
Right. So that's what I'm
And
thinking.
it's a lot of money.
And it is, and it ruined, you work your whole life for this home, and that happens to so
Exactly.
many people. So it just came into my mind going, well, if I have the equity and I can maintain in my property, and maybe I can use that equity to pay the expenses and maybe a nurse,
In-home care.
I can
In-home
live
care,
home.
if they don't need 24-hour care, they just need somebody to come in once a day or
Mhm.
maybe once a week, whatever.
Right.
Medicines,
Yes.
delivery of certain medicines may be the need.
The outside the
It's
family
much,
needs. Yeah.
much cheaper to do it that way
Mhm.
and pay for it using a reverse mortgage than just
Going into
giving
it.
up and going into
Right. And it's just,
long-term care.
it kills me when I hear those stories.
Yes.
So, just thinking as you're speaking, going, wow, and do you find that's a strategy some people are using?
Not too often.
Okay.
Because usually the family will step in to
Mhm.
help in some way.
Right.
Usually when they're at the point where they need something more care than just every day, I
Right.
can do my own housework, I can do all of that. And there are programs, and people don't realize this through the in the area of Greater Springfield Elder Care.
Okay.
I have a woman in Springfield who broke a hip and then had another surgery,
Mm.
and they have somebody going to her house twice a week to do housework.
Okay. Yeah.
She
makes
doesn't
sense.
need, real care, just
Right.
that,
Yep,
but
just
it's
to
being
maintain.
covered.
Okay.
And the other thing I coach my clients on, whether they're my clients or not, just people I talk to, is
Just a good
in some
human.
cities and towns, you can get a discount on your real estate taxes.
Right.
You just have to ask.
Yes.
And
And the
obviously,
veterans
fuel,
too.
fuel assistance
Mhm.
and SNAP benefits. I'm amazed how somebody with $1,300 a month can live in a house.
Oh, I just, this poor woman I was speaking with yesterday, elderly woman, daughter's caring for her. It's the only income, renting. $2,200 a month in Social Security, and she's getting evicted. They sold the house.
Oh,
And, and so, yeah, I go,
How?
how are you even doing it? No debt, 800 credit score. How are you doing that?
Yeah.
She goes, it's really hard.
she could probably teach some people.
I mean,
Yeah.
what? Talk about budgeting,
Yes.
right? But yeah, that's.
Yeah.
So do you have a lot of connections then outside, just by doing this niche of financing? You must have a lot of.
I have a nucleus of people or at least agencies I can refer them to. There's a elder service provider group that we do a call once a month.
Okay.
And
Stay
exchange
connected.
ideas.
Yeah.
exactly.
Good.
And of course, reaching out to the senior centers, elder, the Council on Aging's, and most of my referrals in the area. Now, I'm licensed in all of New England plus
Oh, great.
the Carolinas and Florida. Those I get referrals inside the company
Okay.
because we
yeah.
didn't have coverage there, so I chose those states. But here in Mass, in Western Mass, because I was a loan officer
Mm-hmm.
so long, active in the Real Estate Realtor Association of Pioneer Valley for over 20 years, I know a lot of loan officers. And one of the first thing I did when I started doing just reverse mortgages, reach out to the people I worked with at different companies,
Mhm.
and other people like yourself
Mhm.
to say, hey, if you run across this type of scenario, think of me. It's just a conversation. Let me see if I can help.
Well, let's talk about that a little bit.
Mhm.
So, how would I, in my day-to-day conversations, pin down someone that, I probably can't help or shouldn't because this may be a better way? What would be a flag for me to grab onto and go, oh, you got to talk to Millie?
And and generally they have decent equity in their home
Mm-hmm.
because based on their age, they have less access to it if they're younger. They're struggling with their credit's okay now, but they were trying to do maybe a debt consolidation loan.
Okay. Yeah. Cash out
Or-
refi, equity loan. Okay.
Exactly, that kind of thing. And the numbers are going to be real tight. They'll still qualify, but check, conversation. Would it be better to go this way?
Right. Is
Than
that a
that way.
long-term fix, that cash out? Or is that
Exactly.
going to keep you in the same boat 3 years from now that you are
Exactly.
today? And you have,
Yeah.
you own 70% of your home, maybe you
Right.
got 30% tied up on another
Right.
mortgage, or with this equity you're asking me to give you. Okay.
Yeah.
Just so the consumer knows too, if
Exactly.
they're thinking, I need to get some of this equity I've gained
Yeah.
over these years because I need this medical
Right.
bill paid, and you know what? I don't know where I'm going to get my food money 3 months from now.
Right.
Maybe I should do, but we all know equity loans are, interest only usually in the front, so that payment's nice and soft, and then it matures, and
Yes.
they're variable rates a lot of the time, so you don't know
And
what's going to happen.
there are a lot of people out there who took out their home equity loans before the interest rates went up,
Mm-hmm.
and they were paying 3 to 6%,
And
and now
anymore.
they're 8%.
Yeah.
So even though when they first took it out, their intent was to pay the interest plus some of the
Sure.
principal,
That's
there's
the
not enough
intent.
money for
Yeah.
that. And they mature in 10 or 20 years, depending on what it is.
Correct.
And then they either have to redo it,
Or they're refinancing the whole thing,
they're selling
or
their house,
they can call you,
or they can call me into a reverse.
look
to
at
get rid-
consolidating and then stretching out maybe the excess
And a reverse
equity.
mortgage doesn't require payments, but they can make payments.
Okay, so
So
they
if
can
they-
recoup their
They
equity
can,
with
they
payment.
can, right? They can
Mhm.
save. So maybe the payment on the home equity was going to be $800, and they can afford $5. They can put that $5 on the principal on the
Sure.
reverse and minimize the growth.
Which would cover any taxes, insurance, maybe monthly.
Exactly.
Yeah. Okay, that's cool.
And
Yeah.
speaking of that too, there's lots of different ways people can get. It can be a lump sum, a monthly payment,
Mhm.
a line of credit. There's
Correct.
or a hybrid of all of the above,
Correct. A mixture.
a
Pay off
mixture.
some debt, give them a line
So
of
it can be
credit, and a
personalized,
cash
which is
advance.
great.
Yes.
Yeah.
Let me throw another one at you.
Yeah.
You mind? My brain's going.
It's okay.
How can this money be used? So let's say they take the line of credit.
Mhm.
Do they have to have specific reasons for that line of credit? Okay, so they can draw whatever
They can drive whatever, but
up
in the
until the
first
caps.
in the first year, they're limited to 10% of the appraised value.
Okay.
So
Do you find people are accessing that equity for maybe their family, to give it to them to go buy their home as if an advance on an inheritance?
I've had a couple of people that did that.
Yeah.
One couple wanted to help their grandchildren.
Mhm.
One wanted to go to a special school,
Okay.
culinary, whatever.
Oh, like a college certificate or
Right.
degree.
Gave that one child, one grandchild, money for that, and then the other one gave money to them for something different. That they both,
Yeah.
this is what we want.
Okay, so
You know,
that's
and they
something
only
to-
had 2 grandchildren, and there was no lien on their condo, and
Well, and that's their way of saying I'm doing what
Giving-
I want with this money.
When
exactly.
I
I
love
can
that.
now, rather
Yeah.
than wait. Yeah.
And do you find that financial planners are a good connection for you with these types of
Some of them
clients?
still have a big negative to even thinking about talking about reverse.
Yeah,
Some are
okay.
a little more, and what I try to explain to them, look, if they can take money from their home rather than take more money from their investment
allotted?
with you,
Yeah, there's that. Yep.
you're going to lose them sooner than you want to.
Mhm.
Right.
If you use it as a preservation of asset tool
Mhm.
to take
Right.
the reverse.
Right.
You
Because
think
that
it's
asset's going to
misunderstood?
be, and I think
Along
that
with even financial advisors don't
Yes.
understand it. Yeah.
They don't like it. It's not so much. that I
Maybe
don't
because of the
understand.
risk factor, right? Their
Right.
risk analysis, they analyze risk with
Yeah.
money.
Yeah.
Yeah.
you
Well,
know, for a
speaking of
living.
risk, what could go wrong?
The only thing that, if they don't follow the rules, they don't pay their taxes and
Well, the
insurance.
same way the
on time.
regular mortgage too. If you don't,
Exactly.
all
If they
right.
don't pay,
Yeah. Yeah.
it's trouble.
But I guess
Uh,
what I'm asking for is if there's that kind of risk, what exactly are they afraid of happening?
They've built a plan,
Mm-hmm.
an overall plan
Mhm.
years ago, and their plan was, you do this and this and this, and then you can use this for this long, and then you have your house that your kids will inherit, so you
Mhm.
don't have to worry about them inheriting your assets.
Okay.
But if they can't afford to stay there, or without taking more money from that investment that's going to deplete it sooner, what's the real goal?
Mm-hmm.
Are you benefiting them long term, or are you just blocking this because you heard bad things?
Exactly, and I think that happens often. But you have to look at the full picture. And back when you were talking about those consultation calls that you have, you certainly, I'm sure, you bring in
If
your
they have a financial
Yeah.
planner, I want to talk to them.
Yeah.
100%. Yeah.
Yeah.
The decision makers.
right.
Right.
Who are they leaning back on for making their decision? Yeah. Always.
And
get it
I
sharp.
always go through, how do you hold title right now? Is it in a trust?
Okay.
Do you have a will? Do you have a power of attorney? And I can tell you how many don't.
0. Yeah. No, that is. Yeah. We could have a whole other podcast.
Well, and it's so funny because I'm thinking we're talking here for a half hour or so, but you say often your consultations are more than an hour.
Oh, yes.
So we can only cover
would
a
imagine.
portion while we're talking
I
right here.
understand.
If somebody wanted to reach you and talk about just to learn more, there's no cost. How do they reach you?
So I answer my phone all day long, just like when I was a regular mortgage officer. The phone number is 413-374-8124. And my email address is mpotter@cmghomeloans.com.
And you have a website?
It is, I know it's Millie P at the end. It's CMG Home Loans.
Didn't you have one that was Mortgage Millie?
That's a Gmail account that
Oh,
I
okay.
created.
I just
When you
remember
love that
Mortgage
one.
Millie. Yes,
when
yes.
you change
Yeah.
companies
Yeah.
and you got to make sure you get all your emails, that's when I give out to people.
Okay.
That's
That's stuck in my head
Industry.
now. See,
That's
after
good.
all those years. Yeah.
That's a good one.
Uh,
Thank
I
you
still
for
use it.
this was so informative. I appreciate you coming on here.
thank
and
you for
dropping this
having
for
me.
us. Yeah.
yeah,
this is
and I would
great.
say that because in West wanted it because we fall short of what you would talk about in a consultation. We hit the surface
Oh,
very
yeah.
much, right?
Yes.
So if somebody wanted to get in touch with you, suggest they call and say, let's talk about
Call
our
me.
situation. Let's talk about what this might mean for us
Right.
and help us understand
Mhm.
and to encourage family members to
Absolutely.
participate.
And it could be somebody had a recent illness, maybe a stroke, whatever, and the family is trying to figure out, what do we do next?
Mhm.
Do we, they're going through rehab right now. If they're able to stay in the home,
Yeah.
and is it viable?
Yeah.
Does it make sense? Some people will move their parents in with them. Some people will say, "Never, not on my life."
My kids are fighting currently on that one for me.
Right. Go
I
through those,
feel like
Yeah.
one last thing, it's data collecting. You can wait till there's an emergency or like you really need to make a decision, but it sounds like this should be part of retirement planning strategies as well.
Absolutely. It should be, at least a stepping stone. to
Right.
building
Data
that final
collecting,
plan.
right? I'm
exactly.
just thinking about my retirement. Here's my
Yeah.
asset. I don't plan on moving.
Yeah.
That should be a part of that conversation. Absolutely. I really feel.
And I
it
bet
should
you
be.
there's a handful of people who say, had I only known about that option
Right.
before,
Right.
I might have taken advantage of it.
So
Because
don't-
they learn about it too late.
Right.
Don't
Yeah.
wait till you're 55.
Right.
Give her a
But
call at 40.
One last. one last.
Mark your
thing.
calendar 15 years ahead of
Yeah,
time.
yeah.
Anyway.
A reverse mortgage can be used to purchase a home too. Maybe that home isn't the right place for them for the rest of their lives.
Oh.
And by selling it and not spending all of the cash they get from the sale, using a portion of it with a reverse to preserve some of that
Ooh.
asset for future
Well, that's
needs.
interesting.
That's a curveball and another episode because that
Well,
is
yeah, I
a
think that's actually
huge,
worth talking about. Yeah.
to be
To be
continued.
continued.
Yeah. You got another half hour?
Yeah.
No. we we'll explore that. I think that's. I'm
Seriously,
glad you brought
yeah.
that up.
Yes,
Yeah.
please. Thank you.
So want to say your phone number again? Why not?
413-374-8124.
Okay. Well, thank you, Millie. That
Thank
was
you for
really
having
great.
me.
And we look forward to talking to you again.
Perfect.
Thanks everybody for
All right.
listening.
Yeah. Thanks for listening. Come back and don't forget, like and subscribe if you're on YouTube.
All right. Thanks.